Hi, how's it going everyone, and welcome back to the channel. My name is Henk, and in this video I'm going to be giving a quick overview on Fisher Paykel Healthcare and their recent 12% drop in their share price. Now I'm gonna be having a look at what actually happened there and whether the company is worth investing in, so stay tuned for that. Now, Fisher Paykel Healthcare is one of the biggest companies in New Zealand in terms of market cap. Now, they produce respiratory products and products that are used in respiratory care. And they have been doing extremely well this particular year. So from the beginning of the year 2020, at its peak, they are up by around 70%. And even as recently after their drop, they're still up by around 50% for the year, compared to many other stocks that have not been doing particularly well. They have just been making a real good stock price gains out there. Now, recently, news has came out that Pfizer, one of the vaccine manufacturing companies in the States, says that they have produced a vaccine that is 90% effective against the virus that has been going around recently. So as part of that, many investors believe that Fisher Paykel Healthcare might not get as much business with their respiratory equipment, and that's a potential reason for the sudden sell-off of the Fisher and Paykel Healthcare shares. Now, the other reason may simply be there are a lot of shareholders that are simply profit-taking after the recent run-up by Fisher and Paykel Healthcare shares, and they're basically just taking some profit off the table. So if we look at the earnings and revenue of Fisher Paykel Healthcare, they have a steady increase in revenue every single year for the past 5 years or so. And they also have an increase in earnings over the past 5 years. The past 5 years annual earnings growth is 15.6%, which is extremely good compared to the industry average of around 7.7%. And last year specifically, the company has had a massive 37% earnings growth compared to the previous year. If we take a look at the statistics for Fisher Paykel Healthcare, they have a giant return on equity of 30.45%, which means that for every $1 that they invested, they're earning back 30 cents. And that is a massive amount, especially compared to most other companies that could hover between 10 to 20% return on equity. They also have a current ratio of 1.55, which means that they have much more current assets compared to their current liability. They have a dividend yield ratio, a 5-year average dividend ratio of 1.46, which makes them an okay dividend stock, but probably not the best dividend stock out there. They have a decent payout ratio of 51.4%, which means that they're still reinvesting a lot of the earnings back into the company itself. Analysts are expecting an 11.7% growth for the company per year over the next 5 years, which is another real positive sign for the company. So overall, what do I think about Fisher Paykel Healthcare? I believe that they are an extremely good company with very good financials, and they're in a current medical space that has huge potential to grow in the future. And this particular sell-off, essentially this is kind of an overreaction by the market. And if you are interested in Fisher Paykel Healthcare shares, this could potentially be an opportunity to pick up the shares at a cheaper price. Overall, a good company and bit of an overreaction by the market. And as we can see, the share price is already starting to bounce back a little bit today already. So if this quick video has been helpful to you, please like and subscribe to the channel. and I will see you in the next one. Peace.